A major development has recently gone unnoticed. Rest certain, we can still take advantage of this chance. However, this is going to be the last one. Nevertheless, this may put many investors at danger of losing millions of dollars. Still, what am I even referring to? Here, we'll discover. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the curve in the crypto industry, subscribe. To get more Shib news, be sure to click the like button. In the realm of cryptocurrencies, yesterday was quite a roller coaster. The market was rocked by a shocking revelation. A single morning saw the liquidation of over $300 million worth of leveraged bets. Take a few moments to absorb it. Suddenly, $300 million vanished. This serves as a stark reminder of how unpredictable this field is. Everyone must exercise extreme caution in the near future, especially in light of the recent Bitcoin halving incident. Unpredictable swings in the market are more than likely. But hold on a second. Yesterday was only the beginning. There was something far more important that happened, believe it or not. At first glance, something seemingly little occurred in the Shiba Inu habitat. Interestingly, yesterday, it was unreported by Shiba Inu influencers. Positive developments seldom go unrecognized. One important factor that went unnoticed makes this news far more consequential than anybody had anticipated. Imagine ignoring a little ding on your automobile until you find out it's really a warning indication of a bigger issue lurking below. So, how are things going? Although it may seem dull at first look, a new possibility has been presented by SBI VC Trade, the crypto section of SBI Japan, and it is really rather intriguing. A new service has been established that allows you to earn Shiba Inu and a few other cryptocurrencies passively. Since SBI broke the announcement on their official X account and blogged about it, you may consider it news direct from the source. Anyone with Shiba Inu, Bitcoin, or Bitcoin Cash may use what's called the rent coin lending service. Allow me to explain. For the time being, you may earn rental fees by leasing out cryptocurrency assets that you do not intend to sell, clearly aimed at those looking to supplement their income without liquidating their cryptocurrency holdings. Having a beloved book collection but not always reading from it is analogous to this situation. While you keep your collection secure at home, you may earn some money by lending them to someone else who wants to read them. This is essentially the original model for how libraries were established. The majority of Shiba Inu token holders, almost 75% to be exact, have no plans to sell their tokens in the near future. That's a sizable population that might be keen on this chance. In retrospect, it's a fairly amazing finding. Even more intriguing is the fact that this chance is being offered by a bank. Yes, it is correct. Wait, aren't banks often opposed to cryptocurrency? Then you would be correct. The fact that many financial institutions have reservations about Bitcoin is well known. Some large banks aren't thrilled about it too, so it's not just little ones. This short explanation from a Twitter user explains the fundamental problem with banks in case you still don't get it. Described in layman's words, they related anecdotal evidence that even purportedly crypto-friendly institutions sometimes initiate account freezes in response to cryptocurrency transactions. An example of this is the recent uptick in the number of restricted or blocked accounts held by crypto experts in the United Kingdom. Interestingly, this includes well-known crypto-friendly financial institutions, such as Revolut. The user recounts their experience with Revolut app issues, including account freezes and fees, when attempting to move Ethereum to their personal wallet. The episode brings attention to the delicate balance that banks face when trying to satisfy both regulatory requirements and customer expectations regarding the management of their own finances. There have been concerns raised over the motives and openness of conventional U.S. banks as they close accounts of long-term clients who have been engaged in digital assets. While the United Kingdom's regulatory strategy, which includes positive friction, seeks to improve consumer protection, it has the potential to impede crypto investment procedures. This story highlights the conflict between established financial institutions and the expanding cryptocurrency sector. By voicing dissatisfaction with banks' decision to freeze cryptocurrency accounts and demanding more openness and user agency over their own money, one user nailed it. That's the opinion of a lot of people in the cryptocurrency world. Without a doubt, this is a favorable statement. It supports banking practices that are fair and accountable, which is in line with the concepts of consumer empowerment and financial liberty. Everyone should be able to see and control their own assets without any intervention or limits. The persistent freezing of cryptocurrency accounts by banks, on the other hand, raises moral questions about the reliability and equity of these organizations. It draws attention to problems with prejudice against those who are doing lawful and respectable things in the cryptocurrency industry. These kinds of things may make crypto aficionados feel even more excluded and unfair, while also undermining user trust in conventional financial institutions. It becomes much more intriguing from this point on. Consider JP Morgan, whose CEO Jamie Dimon is well known to be strongly opposed to cryptocurrency and has even advocated for its outright prohibition. And you know what? An important development in the cryptocurrency sector just surfaced. Dimon's status as an authorized participant for Bitcoin spot ETF. There were several heated debates when word of this revelation initially spread. Isn't it a little perplexing? One side of the argument is that banks are against cryptocurrency because it empowers individuals too much. However, they have no problem benefiting from it for their own gain. I don't think this is right from an ethical perspective. Contradictory actions and words are used interchangeably. All clients should be treated equally by banks, regardless of their personal interests or investments. Banks should be consistent in their attitude. Inconsistency like this damages customers and the cryptocurrency community as a whole because it erodes faith in the financial system. It will be fascinating to see how SBI Bank rolls out further crypto services using Shiba Inu and loans. A schism is emerging, and it's happening even if nobody has publicly spoken ill of cryptocurrency. Some people think that all banks will change their minds and start accepting cryptocurrency. On the other side, they see it as a sacrificial horse, something that is not readily apparent, such as a veiled threat. They believe that individuals should proceed with caution, being mindful of hidden dangers. How much longer banks will keep introducing crypto services until they may start to draw back is still unknown. Crypto usage and pricing are expected to continue growing as long as this trend continues. Resuming our previous discussion, let's revisit the scenario where more than $300 million was quickly liquidated. The same thing is happening with Shiba Inus now. If anything goes wrong, Shiba Inu dealers can lose up to $1 million, according to analysts. Still, what am I even referring to? Even if the cryptocurrency market as a whole has taken a nosedive this week, the Shiba Inu price has remained remarkably stable over the $4 level. The rising news out of the Middle East has caused investors to dread and be apprehensive, leading to a fall of more than $50 billion. But the Shiba Inu has shown remarkable fortitude in the face of adversity, avoiding a complete collapse. Shiba Inu's resiliency is due in part to the actions of its backers. Instead of giving in to market anxiety, investors have chosen to keep their Shiba Inu coins, according to on-chain statistics. They are setting themselves up for future rewards rather than selling into the unstable market circumstances. You may learn more about how investors feel about Shiba Inu by looking at how tokens have moved throughout different exchanges. Approximately $9 million worth of Shiba Inu tokens have been transferred to cold storage from wallets hosted by exchanges in the last 7 days. The general selling pressure on exchanges has been decreased, which has helped Shiba Inu, due to tokens being pulled off easily trading marketplaces. The capacity of Shiba Inus to keep their prices stable. Liquidation map analysis also provides insight into how leveraged traders are feeling about the market right now. The data shows that there has been a significant change towards a more positive mood, with more long holdings than short ones. From a practical standpoint, this indicates that most derivative traders are placing bets on a short-term recovery in the price of Shiba Inu. All things considered, the Shiba Inu seems to have a bright future. As shown before, if Shiba Inu prices increase by a further 10%, the short traders in the market might lose more than $1 million due to possible liquidations. It now seems more probable that the Shiba Inu price would progress towards 10% gains given the large stake that the bulls have in the market. Because of the potential loss of over $1 million in liquidations, individuals must exercise extreme caution. However, how do you feel about that? Drop a comment in the space provided. I'd love to hear your thoughts on the matter. The date is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.